Jerome Powell states that the housing market is in a very challenging situation right now, and interest rate cuts alone will not solve the long-term inventory crisis. These are very powerful words, and it is impacting Central Washington on a very unique way. I want to hear from you in the comments. How do you think this is impacting our market? Stick with us as we dive deep into the numbers, what has happened in the last 6 months, and how it's psychologically messing with people, and what we think is going to happen for the next 6 months. We'll dive deep into these numbers and give you the facts of what the housing market is doing today. It is said nationally that we have a deficit of 3.5 to 5.5 million homes, which means in order for us to even catch up for the amount of homes that we need, we have a lot of building to do. Now, the Building Industry Association of Washington is stating that Washington State is short almost 250,000 homes. Now, this varies from county to county, and I want to show you how this breaks down for Central Washington. So take a look at this chart right here. You can see San Juan County is the furthest behind in homes built. They need over 12% more homes built. Now, number 8 on the list is Kittitas County needing 10% more homes. Now, this equates to almost 2,000 homes. In 2022, there was only 500 building permits pulled. So this gap is actually growing, it's increasing. And we're going to talk about how this is impacting prices in a little bit. Next, just right underneath Kittitas County, you have Chelan County. Chelan County is also right around that 10% underbuilt, needing close to 3,000 homes just to catch up to supply. And in 2022, just over 600 home permits were pulled. So as you can see, this deficit is continuing to increase. We need more homes. Let's take a look at Douglas County. Douglas County, our friends over in East Wenatchee, they're behind almost 9% in shortage, and they are pulling permits, or they need about 1,300 homes to catch up, and they're pulling permits just over 200 homes a year. So we need homes, and this plays a huge deal in supply and demand. So when Jerome Powell mentions that interest rate cuts alone is not going to solve our problem, what we really understand is we just don't have enough homes. And what we predict is once interest rates come down, we are going to be back into that 2021 market. So let's take a look at some of these numbers and take a look and see what this means for the area and how it's impacted our market. So here is a graph of what happened in the market in the Cle Elum area last year. In July, where it tabletops, that's when rates really started to increase. We were closer to the 7% interest rate at that time. And I'm going to tell you, during that market, I watched more homes fall out of contract because of interest rates, or buyers were getting cold feet. This was really causing a lot of uncertainty. People started remembering the 98 crash or the '08 crash, and they were starting to think that home prices had hit this peak and then they were just going to start plummeting, and fear just kind of struck everybody. And this is kind of reflected here. Homes started staying on the market for much longer than they had been. Inevitably, home prices started to slip a little bit. Now, come to the beginning of this year, we are starting to see rates soften, and we can see this dip, and now we can see us come back up right here. This is this buyer's confidence coming back. And just with the slightest slip of interest rates, we saw them dip into the mid sixes. We saw buyers flood back to the market, and we're seeing bidding wars on homes that are priced correctly. They are selling within a week, and they're getting multiple offers. If your home is not listed at an appropriate price, these homes are the homes that we're seeing sit for a very long time. And they're the ones that are kind of skewing this market. It makes these numbers hard to read because we have two different sellers really coming to market right now. Okay, let's take a look at the Wenatchee area. And this is a little bit more interesting because when we look at this graph, we can kind of see a little up, down, up, down, up, down of the average home price that is being sold. And that can really be skewed by inventory. You know, was there a lot of the $400,000 homes that were sold that year, or were there more of the $1 million homes sold during that month? So we're seeing this bounce, and at the end of the day, it is showing that our average price point of what is selling is up. But let's take a look at this. I really like to look at price per square foot because that kind of gives us a little bit more of an apples to apples. You can see that year over year, so last year at this same time, home prices were actually selling for about 3% higher than they're selling right now on price per square foot. I don't think this is going to be the case for the rest of the year. I think that now that we're starting to see, if we continue to see interest rates come down, we are going to see a lot of buyers come back into the market. We're already seeing proven that the confidence is back, and we're seeing a lot more people come back. But as those interest rates slip, we're going to see a lot of buyers. And it's also, you got to remember too, that we had a lot of buyers who have been wanting to buy for a long time fall out of the market. And so not only are we going to have this year's buyers that are going to be in, we're going to see those buyers come back. I think buyers, it's going to be very competitive for you this year. Okay, Chelan, let's take a look at your numbers. They don't look as great. So we kind of see on the average home price the same patterns that we saw on Kittitas County in the Wenatchee area, where that peak really hits at July and then everything kind of starts tanking off. This is really caused by fear. People thought that we were going to go through a huge recession. And I think that we did go through a slight correction, but I honestly think that we're at the bottom of that. I think that I don't think that home prices are going to slip any further. And part of the reason why I think that is we're early into our big season, and we are seeing some really large sales happen. We just saw our first $3 million home in Chelan, waterfront home in Chelan, go pending in under 5 days. It was a cash offer and they were closed. And this is the kind of movement and momentum we are starting our season with. Where do I think that there's going to be opportunity? Sellers. There is a lot of sellers that are going to continue to hold on to their homes. Most people refinanced if they didn't have those low interest rates. And so it's really hard to go from a 3.5% interest rate up to a 6% interest rate. They're saying the magic number for sellers to feel a little bit more comfortable about selling their homes is about 5.5%. Now, these are for the people where I'm going to call them the luxury sellers. They can sell because they want to. Of course, we're always going to see sellers in the market that are relocating for jobs or have different family needs that absolutely have to sell. So we're going to see those homes continue to come on the market, but inventory is going to be tight. So if you are a seller, I actually think this is really good news for you. I think because there is low inventory, you're going to have less competition and you're going to have a lot more buyers looking at your home. It won't surprise me if we see days on market drop as we get closer to the summer months. And sellers, you do have a big opportunity, especially if you're selling and potentially buying cash or relocating to another market. I think there's no harm in selling this year. It's just really going to depend on your independent needs. So the Cle Elum area, Leavenworth and Chelan, those are a little bit more of second home vacation type sales that we see. They're much more heavier on the tourism market. And I think we might start to see a little bit more inventory come on, possibly in the Cle Elum area. And that has to do with the short-term rentals. And there isn't any real regulation on short-term rentals in this area. And I kind of feel like the market is getting a little diluted. In other words, it's really starting to get tough to float that mortgage and the expenses. On top of the income shrinking for these short-term rentals, insurance rates are doubling for some people. Some people are losing their insurance rates, their insurance altogether. And the assessor has really started upping home values, which is increasing property taxes. I think the profitability of some of these homes is really starting to tighten, and it could put some families in a position to where they can't afford to keep that home, or they just choose that it's not worth it anymore. So we might see some homes come on the market in the Cle Elum area, those second homes coming on the market in the Cle Elum area. Chelan and Leavenworth, well, they got really lucky when Chelan County put this moratorium on, or basically capped how many short-term rentals can come into the market. So they are not going to see any more competition come on. So their revenue, their income should continue to increase as that demand increase. Although Airbnb is reporting that short-term rentals are actually down, I want to say like 10% across the nation. But they're still going to feel those pressures from the insurance companies and the property taxes. You might see some onesie twosies come on. If you want to get into the short-term rental market in these areas, it's going to be a good time to really keep your eyes out. Now, these short-term rental permits don't necessarily transfer all the time, but there are homes out there that are grandfathered in and they get to transfer first one sale. So you might find that opportunity this year. So all in all, what do I think is going to happen in this market? I think if rates continue to go down, we are going to see a lot of buyers come back and it's going to be very competitive. If you were a buyer, get your pre-approval done and get connected with us so we can get you set and ready to go. You're going to have to pounce on that house when it comes up. Sellers, don't be bashful, don't be shy to sell. It is still a seller's market. I would just have a really good plan on where you're going to, because trading in 3.5% for 7 is really tough, and we definitely understand that.